We last talked with Petra in May 2020, and we're now back for an update, with the Korean value equity strategy up over 60% in 2020. We hope you enjoy this interview with Albert and Chan and look forward to resuming in-person conferences later this year. Good afternoon, Chan, Albert. Thanks so much for joining us for an interview again. We last did this on the 12th of May and we expected to see you in late 2020 in London. Of course, lots has changed since then, but it's great to catch up and do another interview with you today.
It's always good to see you, and thanks for having us today.
And thank you. And unfortunately, this pandemic lasts much longer than we ever imagined. Anyway, thank you for giving us a chance to have an interview.
And so, Chan, let's first note your performance. Despite the pandemic, you were up more than 60% in 2020, so 35% ahead of the Korean market. So perhaps tell us a little bit about that and bring us up to date.
Yes, despite the pandemic, Petra had its best year ever in year 2020 in terms of fund performance. I think we did very well last year, primarily because we owned many stocks in our portfolio whose businesses were very competitive and predisposed to benefit from the ongoing new economic trends. In addition, our portfolio companies have strong balance sheets, which means they are less vulnerable to the short-term economic downturn. But more importantly, we had bought these stocks several years ago at a cheap price when the Korean market was still very inexpensive, even before the market crash. As you know, unlike major equity markets in the world, the Korean stock market had been exceptionally cheap for many years, as it moved in sideways for the past 5 years prior to year 2020. When the market crashed in March last year, we recognized that the market was likely to recover much faster because the COVID-19 crisis was not triggered by economic problems. In fact, we believe that the low economic activity caused by pandemic was more akin to vacation rather than hospitalization. So we knew that the economy would resume in the same way as before. Indeed, the pandemic ended up accelerating the pre-existing economic trends, which eventually benefited the stocks that we had already owned in the industries like semiconductors, mobile platforms, and renewables, and so forth. So even during the pandemic, when market crashed, we did not have to make any major change to our portfolio. Of course, it seems so obvious now, but it was not so obvious back then.
And you wrote about the Korean economy in your recent letter and the changing economic composition of it. Albert, could you tell us a little bit more about that and how you view that?
Many investors, even in Korea, fail to recognize that Korea's economic composition has transformed in a meaningful way. As you know, the Korean economy has long been dominated by cyclical industries until a few years ago, and these industries usually trade at a low multiple. Surprisingly, however, Korea has been gradually transforming into an economy dominated by secularly growing new technology industries. Currently, 9 of the top 10 largest stocks by market cap are new economy stocks, including semiconductors, mobile platforms, biotech, and EV batteries. If we choose to include Hyundai Motor, whose stock price has risen lately, thanks to possible collaboration with Apple in the EV platform, in the EV category, it is all of the top 10. In that sense, the Korean market is becoming more like Nasdaq. No wonder the Korean market outperformed most other markets in the year 2020. In fact, we think Korea is a technology powerhouse. Except the US and possibly China, Korea is the most competitive in new technology industries. For example, Korea is a global leader in a semiconductor memory chip, a critical component in a rapidly growing AI and cloud computing, producing about 70% of the global market. Advanced semiconductor manufacturing fabs are located in just 2 countries, Korea and Taiwan. Semiconductor chips are the crude oil of the future. In that sense, the manufacturing is even more concentrated compared to the production of crude oil. Also, Korean companies are major players in EV batteries, the most important part in electric vehicle. Furthermore, the worldwide popularity of the Korean culture products, K-pop, K-beauty, K-food, or K-contents is gaining momentum. This type of cultural export with increasing soft power of the country Korea will eventually lead to more successful consumer brands in the world. As a result, Korean economy is well prepared for a rapidly changing environment thanks to its successful transformation of its economic composition. Therefore, we think the Korean market warrants a future multiple expansion, and also it is likely to be re-rated by market participants.
And we recently saw the vice chairman of Samsung Electronics was J.Y. Lee being sent to jail over bribery charges instead of a more lenient suspended sentence. In light of this event, and along with some of the changes to the Korean Commercial Code, what's your view on the implementation of that improving corporate governance picture in Korea?
We believe that J.Y. Lee is going to jail is a clear sign that Korea is finally changing in the right direction. It sends a strong message that this type of illegal activities by even the most powerful business person will be no longer overlooked in Korea. While the pace is not as rapid as we'd like to see, the Korean corporate governance is improving gradually, which will have an overall positive effect on reducing the Korea discount. Especially the adoption of the Korean Stewardship Code by most of large domestic institutional investors, including MPS, Korea's largest national pension fund, is likely to result in more shareholder engagement in tackling corporate governance issues. Also, an increasing number of activist investors, both foreign and local, are forcing the companies to rethink their shareholder policy. We're already noticing some positive changes as many Korean companies have started to increase dividend payouts and share buybacks. In addition, the Korean lawmakers are finally amending and revising laws and regulations to enforce stricter rules against self-dealings by corporate owners and also improve the rights of minority shareholders.